Nobody else doing this. How did you go and get VC funding then? You've had 90 conversations now. VCs are uncomfortable with this, but we're here because there was success at some point. You managed to get the VCs. How did you do that?
Well, I think there was multiple things. I think in the beginning, first I was a terrible fundraiser. I think probably
You made mistakes.
Yeah, well, I think we weren't communicating our story well of what we wanted this to become and where this could be, where this could head. I think that when you think about this space, it is, you do have the opportunity to build almost like the Apple for housing. You can control the whole physical environment of the space, and that's a very powerful idea. That's a very exciting idea. And that was not how I was pitching it in the beginning, for sure. I think we got better at communicating it. I think that we also started to focus more on investors who are high conviction investors. And I tell founders to do this a lot, which is like when you have a difficult business that's unfamiliar, that VCs are unfamiliar with, that you need to target high conviction investors because...
What does that mean?
So those are investors that are, they can make a decision without other investors having to be involved.
Because consensus will kill it.
Yes, and it's when you're in a particular market or segment where, it's not the hottest thing at the time, getting all sorts of people around it to create that FOMO is very hard to do, right? And that's sort of the typical process that you would go through. But if you can't do that, then you really need to go after these high conviction investors, and these are people who will make decisions based on their own ration and reason, and they don't need others in the market to tell them, oh, this is a good idea or not a good idea. So in the beginning, we were talking to a lot of investors who would then call their friends and say, oh.
Ask opinions from people who don't get it. They'll call someone randomly. This still happens, by the way. A lot of great VCs will start doing reference calls from industries. They're looking at a commercial opportunity and they'll call a residential agent, and the residential agent will say, this makes no sense.
Yep.
But that's a failure.
Yep. Yeah, and so we ended up having a few of them who were high conviction, and we ended up getting our first term sheet from Accomplice. TJ Mahoney, who's the partner there, he had started a company before called FlipKey, which was one of the it competed and it sold to TripAdvisor. They did very well. It competed with HomeAway and VRBO.
So he was an industry expert, a former entrepreneur operator. He got it, and he was also an investor. Same with me, by the way. When we started Bungle, we had the guys who started a company called Tapjoy, and Tapjoy at the time was one of the first companies to put app install ads inside of mobile phones. When they invested, then VCs were more comfortable, because you've got the former two founders, Ben Lewis and Lee Linden, great guys. That was the kicking. Well, that was one of the key moments for us when VCs were more comfortable. Is that what happened in your case too? Once you had this guy,
it helps. We still needed to close the rest of the round, but it certainly helped. And then we also had Founder Collective, Dave Frankel, who's early in Uber and a handful of other companies, those two guys ended up helping us to,
put the round together. How big was this round?
It ended up being 1.7 million.
So this is your $1 million seed round.
Seed round, yeah.
This is the PropTech VC podcast. We give you unique insights into how innovative technologies are disrupting real estate. We interview top entrepreneurs, investors, and knowledgeable experts to share the inside scoop in this fast-moving industry. It's hosted by leading PropTech VC, Zain Jaffer. Let's dive into today's content.